Big piece. Yeah, I had to get the both devices online. But yeah, man, I wanted to kind of break down the SVB, the banking collapse, or just the collapse that's happening right now involving the financial system or banking system sector right now in general. And then just different things that I see going on in the markets and how you can capitalize on it. It's definitely an interesting time in the markets. Volatility is still the same level of volatility that was there um, months ago, right? It's the same level of volatility that was there last year. The markets are having epic runs, and then these rallies, and then they're giving back gains just as easily as they're going on these runs. Um, it's still the same up and down cycles in the markets. Actually, right now, what I'm seeing is the markets look exactly how they looked this time a year ago. Okay, this time a year ago, markets were in the exact same positioning, except for the prices are a bit higher because the costs have went up, right? You're not gonna find the same thing that you're gonna find right now at the same prices you did a year ago, but you will find the same deals in the same businesses. The markets just kind of go in cycles. They kind of go in cycles, right? So, like I said, this market is the same market I seen from a year ago. It's the exact same, and I'm actually gonna position my portfolio similarly to the way I did a year ago. The economics haven't changed much. Inflation is still a concern. Um, this SVB banking collapse thing, everyone is taking it as a negative thing. What happens is, and this is called a bank run, okay? It's happened throughout history for years. You can go back, it's probably happened since the 1900s, right? Okay. What a bank run is when people start, it's a widespread panic. People pull all the money out of the bank. A bank is unable to provide, monetary uh, support to the businesses that it has, the investments that it has, the loans that it has. It can't pay, of course, the people that have money in it because everyone's pulling money out. And just Google it, look it up, a bank run. That's all that's happening right now. It's happened throughout history. Um, no company is created equally. No company is created equally. You see, you have a SVB bank that's collapsed, right? And you have a Credit Suisse, which is currently collapsing. And then but you got to think about it though. Bank of America is in good standing still. They're an amazing, wonderful company. Wells Fargo, Goldman Sachs, Chase, J.P. Morgan Chase. These are still wonderful financial institutions. These are still amazing, places to store money. They still have great business models and everything of that nature. But here's the thing: their stock price would still be impacted and affected just as if their banks were collapsing. Right now, Bank of America is trading at close to a 52-week low, in part due to the aftermath or the fallout of SVB Bank, right? So what happens is the markets begin to react. Okay, the markets are reactive. They're negative, but they're also positive, right? So right now the markets are reacting to the news of SVB bank collapse, and it's actually negatively impacting the other banks. Here's the thing, though: it's negatively impacting their stock prices, but it's actually positively impacting their money that they're making, right? And what I mean by that is a lot of these banks that these people have poured their money out from, they have to put their money somewhere. So they're going to like a Bank of America, they're going to a Wells Fargo, they're going to a Goldman Sachs, a Chase, and things like that to store their banks, so to store their money. So now these banks, in essence, down the line, they're going to end up prospering because of it. So right now, it's just a buying opportunity. So because of this bank's collapse, because of Credit Suisse's collapse, you are now going to have opportunities by way of stock price and valuation to buy these other banks at discounts. Okay, so the markets are negative, but here's the thing: the markets are also positive, right? So you have a negative market and a positive market. You just have to be able to find and locate the deals in the markets, right? Um, right now it's been a lot of drawbacks from the recent rallies that have been happening. But here's the thing: it's a bull market somewhere, everywhere, right? It's green somewhere. Stocks are on the way up somewhere. As an investor, you don't have to me, in my opinion, as a fundamental long-term investor, you don't have to concern yourself with the day-to-day ebbs and flows, the ups and downs, the movements of the markets unless you're trading. If you're trading, that's where you make your bread and butter at. But if you're a long-term holding, it's no reason for you to concern yourself with whether the market is going up or going down, right? You want to concern yourself with whether you bought into a wonderful business, right? Whether they have a competitive advantage, a moat, whether they have a strong management team, strong balance sheet, things like that, strong financials. That's what you want to invest into. You don't want to sit here and concern yourself with the everydays of the markets, right? Unless you're trading. Um, it's no need to. You just want to make sure you're investing into businesses whose stock price is going to go up more than it's going to go down. It's going to go up and down every day. Um, and you want to make sure that the long term business fundamentals are solid, right? You want to make sure what a company's going to do, what a company's doing in the long term is going to be beneficial to what's going on right now, right? You don't want to concern yourself with what's going on today in the market, in today's markets, with what will be going on, because the same markets that's going on today isn't going to be the same market from 2 weeks ago, or won't be the same market from 2 months from now. But the business, right? Because right now, this is a time where you want to make sure you're investing in the fundamentally sound businesses. Their stock price will go up regardless. Okay, that's how it works. You don't want to concern yourself with the day to day. The day to day will drive you crazy. It drives traders crazy. They just love it because they're a crazy bunch of people. But in all honesty, though, you don't want to concern yourself with the day to day movements of stocks. Right? It's like when you're tending to a garden or flowers, you're not going out there every day to watch how they grown. You're gonna drive yourself insane. But you will go out there periodically to check up on it, right? So you want to check up on your portfolio. You want to make who makes who makes out the best. Man, that's a tough question right there. J.P. Morgan is one of the more solid banks. They have one of the more solid business models. But I think it's gonna be a matter of who has the best who structured the best, right? Who structured the best? Because if you look at it, when American Airlines was fumbling the ball around December, January with all the canceled and delayed flights, you had companies like Delta and all these other companies that were like still, thriving and still able to send flights out and still able to accommodate the needs of their customer base, right? They had the infrastructure in place to where they wouldn't collapse, or they wouldn't have to cancel flights and things of that nature, right? So it just really depends on who has the best infrastructure, honestly, who has the best systems in place and who is well prepared for this. So J.P. Morgan it's a great financial institution. I can definitely see them being, properly prepared for what's about to happen. But the markets are going to do what the markets are going to do. You have to find a way to position yourself in order to best, in order to get the most out of your portfolio. You have to position yourself the best to get the most out of your portfolio. What I mean by that is you have to see where the economy is heading right now. You have to understand what business models will be favorable in this economy right now, and then you have to be able to identify the 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 price points that you want to buy in. Right, you want to identify whether this is a business that is trading under market value, price to book, price to earnings, and price to sales ratios, respectively, and of course their actual stock price. You want to make sure that they're trading at reasonable valuations, but you also want to make sure that you're able to capitalize on this time. Okay, so this time last year, this is how I know the markets are the exact same as they were last year. On my watch list was H&R Block. I wasn't able to buy into it last year. I got some this year. And it soared. It was selling like around 25 bucks, and then it ended up soaring to like 50 something, right? Drawback is down to like 30 something again. It won't make it back to that same 20 something, $25 again, because of course the markets have changed, right? The prices have changed. Today's prices and yesterday's price, right? That's why you could buy a stock of Apple for like 20 bucks, 3 bucks, 10 bucks, however it was in the early 2000s, but right now it's trading at 150 bucks. Today's price isn't yesterday's price. But I noticed that the cycle that the markets are in, H&R Block is trading exactly where it was trading, in proportion to where it was trading at this time last year. The same with Walgreens, the same with Pfizer, the same with Coca-Cola, the same with a lot of these big companies are they're having there it's just, the markets just go in cycles. The markets go in cycles, but you're able, with the time that you spend in the markets, you're able to capitalize on these cycles, right? You're able to capitalize on the movements, on the ups and downs, the ebbs and flows, because it just comes around full circle. So if you're able to catch this right here at this point, and then you have to be patient in these markets. You have to be patient. You catch something here, you're not able to buy in, it's gonna go up, 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 come to a point here, and then it's gonna start coming back down again. Now, if you're able to be patient enough, you will be able to catch it at that price. Or if you did catch it at that price, you build a nice position, remain patient, don't average up too much, because when it comes back around for a circle and that price goes back down, you'll be able to now continue to build out that position, average down, or just continue to, hold on to a quality company, right? And this is what, as an investor, you have to understand. It's gonna be ups and downs in the markets. Things are gonna happen. You have businesses are gonna collapse. Businesses are gonna make crazy decisions. Great companies are gonna buy other great companies. Like right now, TD Ameritrade recently was acquiesced or bought by Charles Schwab. Was TD Ameritrade on the downswing? No, no, they weren't. Is TD Ameritrade going to continue to be a great company? Yes, they are. They're just going to be under the umbrella of another business, of another wonderful business that was able to come in and swallow them, because they were a giant compared to them. That's why Amazon is buying a bunch of businesses. That's why Apple is either buying or partnering with a bunch of businesses. That's called, for Charles Schwab, that's a means of vertical integrating, right? Vertical integration. But being able to further deepen their infrastructure, their business models, grow their earnings, things like that, by way of acquiescing another business. This is just all a part of how you play the game right here. So, oh yeah, I appreciate you. I appreciate you. This is just how you play the game right here. And in order to win the game, I suggest you understand how to play. A lot of people jump into the markets or are afraid to get into the markets due to ignorance, right? And the only way that you can overcome ignorance is with education, is with knowledge, is with wisdom. So you want to learn how to play these games, right? You can take someone who has money that's not earning a penny, and you can jump into the markets with the proper education and make money from day one. You have to learn how to play the game. A lot of people aren't willing to take the time to educate themselves. Well, a lot of that time that you're spending on social media, and it's crazy because you're watching this on social media, but a lot of time you're spending on social media digesting whatever entertainment information, digesting whatever, scrolling movies, whatever, anything to that degree. It could be time that you can spend using building out a portfolio. It could be times you can spend using to build a business, to build a side hustle, to learn a new skill, a valuable skills. If you look at the way everything is going right now, everything is going towards automation. AI is going to be replacing a lot of humans in the workplace. But if you're able to build these skills, get these skill sets, digest these data sets, and implement them and use them to your benefit, you'll be able to win in any economy, any market, and anything like that. So I just wanted to share those thoughts with y'all real quick. But yeah, just understand that no two companies are made the same, and you can definitely benefit from understanding how the markets work, the cycles that the markets work in, and understand that no two companies are created the same. You can have rainy days over here and sunny skies over here in the exact same markets. It won't make a difference, okay? So just because you have a couple of banks collapsing, SVB, which is already collapsed, and the Credit Suisse, which is collapsing, that doesn't mean that you don't have other amazing opportunities in the financial sector of the markets, because like I said, the only thing that's happening with these bank collapses are the markets are reacting to the other banks, and it's just bringing their prices down to a more lucrative valuation, right? It's bringing them down to a more, a more attractive valuation. So you want to be, you can look at the markets in a good way or in a bad way. If you look at it in a bad way, all you're going to see is red, losing money, and you'll never be able to see the green and the profit that you can make. All right. So until next time, peace, investor family.